Hello, this is Dale, and this is my September 2024 rack up of the 2-day till expiration credit spread strategy. I'm also going to be showing you an SPX weekly bull put that we just got out of today. We put it on Friday, 9/27/24, and took it off today. Very profitable. Actually, we left it go all the way till expiration. So, and I want to do these every month. I started these back in, I think, let's see, July, August. No, I started them back in June. So you can go back and listen to these archived. But every month, I'm about the only one that does this. I'm going to show you how I did for the month. And let you be the judge. I think this is the best strategy for retail investors. It's a low anxiety, high return strategy. I've been trading hedge fund manager for greater than 4 decades, and in the last 3+ years, I developed this and have been training my members on how to use it, giving them alerts when it's time to get in, and they're making a lot of money. This is how I make my living. So when I send out an alert that this trade, this is the one that I am putting on. These are the actual trades that I put on. Okay, the 2-day till expiration credit spread, we have an edge. First of all, credit spreads yield monthly income on a consistent basis, because what we're doing with a credit spread is you're actually selling premium, and then you're buying one further out of the money for protection. So you are the seller, okay? And when we sell, we're going to use a delta of about 0.1 on the short strike. And what that means in layman's terms is about 90% of all these strike prices will expire out of the money. 90%, okay? And that's where we're putting on our credit spread. 90% chance it's going to win. That's a big edge. Okay? The other edge we have is I've got indicators that I use. There's only 4 indicators that I use, and one of the indicators shows me when the SPX price is overbought or oversold. Now, statistically, when it gets into that range, about 95% of all trades will revert back to the mean. So this is a great big edge too. So you've got 2 big edges here. You've got a strategy that brings in consistent money. And with the 2-day, what we're really doing is we're selling premium, and we're looking at that overnight theta decay. Let's take a quick look at this. In this chart, what I'm showing you is the rapid theta decay, or when you sell an option, you're selling it for a premium. The only value it has is time, okay? And you can see that how quickly that erodes as you get closer and closer to expiration. We're taking advantage of this last part where you're exponentially decaying. This is a trade we just got out of today. This is a bull put on the SPX. We got in on Friday. What I was looking at is we were looking like it was making a nice move to the upside. I got in and I sold a bull put. I sold the 30 September, which is today, Monday, for 56.85, and bought the one for 30 September 56.75. That gave me a net credit of 85 cents. 85 cents. Okay. Okay, so let's take a look at this trade. I've got a bull put, which is a bullish strategy. But what happened? The market actually came down. The SPX came down, but only to a certain level, and then it chipped back up. In other words, it's trading like it usually trades. You know, nothing goes all the way down, all the way up. It kind of seesaws back and forth. And then we had another big drop here about 2 o'clock. But we were way far away from our short strike with only 2 hours to trade. You want to let this one go, let it work, if you will, and then you can see how it ended the day, a very strong day. And so we basically got a net credit of 85 cents and collected all of that because we actually didn't buy it back. We let it expire worthless. So all this money goes into your account. Now, 85 cents minus this is 85 cents profit, or $85 on one contract. One contract requires 100 shares of the SPX in a contract, and I always go with a credit spread that's 10 points apart. So it's 10 times 100 or $1,000. One contract requires $1,000. Okay. I like to tell people to start low, but actually have some money in the game, because you know, you see the emotions, money going in and out and up and down, and how are you going to look at this thing? So, but I have a great majority of my members that trade more than 5 contracts per trade. But this $85 for 5 contracts is $425. For 10 contracts, it's $950. That isn't bad. That isn't bad. Now that's based on this is 5 contracts at $1,000. That's $5,000 contract, and you're getting about 10% in 2 days. Hard to believe. Hard to beat. Past performance are no guarantee of future results. But I've been doing this for greater than, like I said, 40 years, and the last 3+ years I've been doing this 2-day till expiration credit spread strategy. Well, let's take a look at my documented results. In September, we had 9 trades, 8 winners and 1 loss. The thing about credit spreads is you got to be careful, because if it goes against you, you can lose a lot of money. Okay. So with credit spreads, it's very important to have an exit strategy. And I have an exit strategy that I follow religiously. I teach this. And you can see the one loss was trimmed. So it didn't wipe out all our gains. And we ended up the month up $2,600 based on 5 contracts per trade. And let me put that in perspective a little bit. $2,600, 5 contracts is $5,000 invested to bring in greater than 50% in the month of September. Greater than 50% in the month of September, with 8 wins and 1 loss, with a very conservative trading strategy that I have developed. Year to date for 2024, we've had 52 winners and 8 losses. And the net is we're up $14,205 based on 5 contracts per trade. Let me put that in perspective. We're 3/4 of the way through the year on $5,000 investment necessary for 5 contracts. We've brought in about 3 times that, 300% return, 3/4 of a year in. And I know a lot of you that are traders and know what's been going on in the market with a lot of the FOMC, you know, with our decreasing the interest rates, but keeping them high for a while. Inflation is a concern. You know that this has not been an easy year to win. This is a typical year for me because we can trade when the market's going up or going down using credit spreads. I'd like you to join me now. I release one to two of the 2-day till expiration credit spread trades per week. Last week I released 3, and they have had, since I've been releasing these publicly, 86% win rate. 86% win rate. Now, there's 2 things you can do. If you go to my website, there's two products that we have. The first is the membership. And the second one is the workshop. I recommend that the traders get both. The workshop is 13 modules. It's going to teach you everything you know to do it yourself. The membership is my showing you how I'm trading when I'm getting in. And then once a week on Tuesdays, I put out a recorded webinar that talks about the trades we had this week, why I got in them, what I saw, why I got out of them. So this is to learn the strategy, but this is really to take it to another level and watch what a professional does. I had a member text me today saying, we had a big drop around 2 o'clock. What do you think we're going to do? And I said, well, we've only lost so much. We only have 2 hours till the end of the day where we can capture everything. According to the chart, it looks like it should be going back up. Let's stay with it, okay? And because of that, he made extra amount of money. This teaches you how to do it. This teaches you how to master it. How long does it take to stick with this till you master it? It all depends on you. But I show you I send out alerts when I'm going to make a trade, and I talk about them once a week on Tuesdays in the webinar. I think this is the absolute best teaching and using strategy available today. And what I'd like you to do is all become a member, join me, and let's all have fun and make some money. All right. Hope you enjoyed this video. Bye-bye now.